With just 1 week left in 2024, housing remains a key issue heading into the new year. Consumers will continue to try to navigate both of these things. High mortgage rates, though, and high prices. I want to bring in our next guest to discuss what to expect in the new year. Ivy Zelman, Executive Vice President, Zelman Associates. Good morning, Ivy.
Good morning.
What do you think is going to happen? I mean, did you see there's a story, by the way, in the Journal, is it this morning, that says that your mortgage is not actually even your biggest cost anymore? Did you see that? It was actually surprising.
No, I did.
Surprising statistic.
32% were paying more than half of their mortgage payment to property taxes and homeowners insurance. Pretty troubling.
Pretty troubling. So what do you, as it portends for 25, what do you see?
I think more challenges. We haven't seen any relief on the stretched affordability issue, and that's only getting worse as mortgage rates remain elevated and are going higher.
What do you think the rates will be for the next 12 months? What do you think like the average homeowner should expect if they were going to go try to buy a new home?
You know, I don't forecast rates, but I can't imagine why rates would go much lower from here, especially with some of the Trump administration proposals with potential risk of higher inflation. So I think that right now we're looking at the affordability index is probably about almost 25% above trend line for existing homes and about 10 to 15% above for new homes. So I think today it's really troubling for the entry level buyer. We are seeing more resilience for the higher move-up segment, especially those that are able to use cash. But it's a challenging market.
In terms of new builds, when you look geographically, is there any market where you see actually something really great happening?
I wouldn't say there's anything great happening, because if you look at the markets that are not high production new home markets, like the Midwest, we're actually seeing continued home price inflation that's pretty significant. Take my home state of Cleveland right now, or my market of Cleveland. Right now, home prices are up 8% year to date compared to markets nationally up 3 to 4%. So I think where the production builders are, that's making availability of more product more competitive and keeping a lid on home price inflation. But I wouldn't say anything's really good going on. And I think that we're definitely see that bifurcation in the market throughout the U.S.
Do you like any of the home builders, the public home builders, publicly traded home builders?
We are more skewed to the high-end builders. We're recommending builders like Toll, Dream Finders, Taylor Morrison. But we also like Lennar, given the transformation we're expecting from the spin, the Milrose spin. But I think it's all relative. I think we're more neutral on the sector, given the challenges that we see. We think you have to really be looking for, some modest exposure, but there's no question there are headwinds. And you start talking about the risk of tariffs and, deportation. I think there are headwinds that will keep the sector a lid on performance.
So you actually would not, you're saying you would not even buy in?
Well,
if you were not exposed.
Yeah, I think that you want to have some exposure, but relative to the market, we don't see the sector outperforming the market.
But you go high end over something else. We're looking at the Spider S&P home builders. You wouldn't want to buy an index of this. You'd be more particular.
Yes, I'd be more particular. I think you'll see whether it's the entry-level builders will have a tougher time. Incentives, we just did our proprietary survey. We released it. Incentives at our 2-year high. Spec inventory is also pretty high, but they're working through it. So I think that we're going to see margin pressure. I think that will be less evident for the builders that are more skewed to the high end. So it's, challenging. The builders are very well positioned. Their balance sheets are the best they've ever been. But nevertheless, as we sit today, I don't really see an exciting catalyst that would propel these stocks as an industry, as a group higher.